Hi everyone, we're back to the last section of chapter 7. So the last part of chapter 7 is journalizing the payroll register and journalizing employer tax liability and workman's compensation. So you already did all the calculations, you did a payroll register, you did the employer taxes calculations. Now we're going to put them in the journal and then post them to the ledger. So here's the accounts that you would have if you're doing payroll, um, journalizing the payroll register and employer tax expense. So remember that the book had two categories. It's going back from that same problem. If you're confused, you might want to check page 241 in your book because that's where they're getting these accounts from. So you had two categories of employees at the very end when you did their payroll register. So this is important. This is going to be your gross pay. So you're on your payroll register. This is your gross pay, two categories of employees. Gross pay is just like wage expense. Remember, you had salaries expense and wage expense. That's what this is right here. Payroll tax expense is what the employer has to pay out of pocket for all the payroll taxes they pay, which is, remember, FUTA, SUTA, matching OASDI, and matching Medicare. So that is called payroll tax expense. And then you have workman's compensation expense, which is an expense when you actually pay it. Insurance expense, here their insurance expense, I believe, is the medical insurance they were deducting from everyone's paycheck. And then you have payroll cash, which would be when you actually cut a check and pay your employees. That makes sense. That's an asset going to be seen on the balance sheet. And then remember we talked about workman's comp. You buy a policy in advance, you pay what you think you owe, and that would be a prepaid insurance example. So that would go on the balance sheet. And then remember, OASDI and Medicare is matched by the employer, and it's taken also out of the employee's paycheck. So it's one account. Both of those go in there because that amount is then going to be paid to Social Security Administration, right? So it's payable. It said tax payable. So a payable would show up where? Do you remember? You better at this point. It's going to show up on the balance sheet. Okay, and then there's a few more accounts that we would use when we do the payroll register, and that would be federal income tax. Remember, that's payable. The employer takes it out of your paycheck and sends it off to the IRS. State income tax, same thing. Federal unemployment, state unemployment, bundled together. This is the employer only pays this, so that is also a liability until they pay it. When they pay it, then it decreases and goes away until the next pay period. Oh, and then they have medical insurance. I don't know what that other insurance was. And then wage and salaries payable. This one's important because wage and salaries payable is your net pay. So your gross pay is it's called salaries expense, or in this case, they itemize. There are two categories of salaries expense. Everything else is, and for the employee, is going to be a liability until you get to net pay. So I'll show you that here in a minute. So here's how you would journalize it. Or no, just review your payroll register. Okay, I had to make this slide. I had to cut it out of the book. So it's not your eyes or my eyes. It is just blurry because I took this from page 241 in the book. So you could have a look at it. So basically, you already learned how to do this. This is the second part of the payroll register showing the deductions because I wanted to show you that. So this is where we have that administrative and schedules expense, two different categories of payroll, how we divide up our employees. So both of these are categories of where that gross pay would be. That is going to be your payroll expense. Okay, and then you have all your employees' deductions. These are all going to be payables. Okay, so the payables would be federal income tax, state income tax, OASDI, Medicare, and then their medical insurance. If we add all those up, deduct it from their gross pay, then we get their net pay. Their net pay is the actual amount of their paycheck, and that's at the end of the register. Okay, I think I have my slides a little bit mixed up here. This one then is the top part. So this is where you're calculating their gross pay, right? So their gross pay is going to go right there. The gross pay for Catherine is under administration. So all the deductions have been calculated. Okay, so This is an important slide. So this one, let me move me. So this one shows it, the numbers aren't the same. This drives me crazy, but you still get the right idea, right? So just telling you, you got to know how to do this for the quiz that's coming up. So you better have this. My advice is have this very handy so that you can remember how to do the journalizing. Okay, so think about what's happening here. This is your wage expense or salaries expense. It doesn't matter. It's all just a name. It's however you name your accounts. So in their case, they named it as the two categories of accounts. So this right here is your gross pay. Okay, that's amount that is coming out of your business. And then what you had to do as the employer is you had to take taxes out of each person's paycheck. So there's all the taxes out of your employee's paycheck. Okay, that's why this is called journalizing the payroll register. So this is everything that came out of the payroll register, all the taxes, the medical insurance, and then the very last thing that's going to come out of what you owe your employees is your gross pay minus all the deductions equals the net pay. So all of these are credits. If you add these together, they will equal $12,526.92. I guarantee it. I'm positive. So these are all credits that sum up to the total of the debits. This is your gross pay, salaries and wage expense, less all these accounts payable and our salaries payable that we owe our employees. Once we pay our employees, that's where the payroll cash is going to be credited and your wage and salaries payable would be debited, right? Because then I got rid of my liability and I got rid of my cash because I paid my employees. They don't ever show you that step, but that is the next step. So this is journalizing the payroll register. The other thing you have to do is you have to journalize the taxes that the employer has to pay because we keep track of every penny that we spend in accounting. So this is journalizing the payroll register. This is journalizing the payroll tax expense. So this is just what the employer has to pay. So let me move me again. So bad spot. So this is the total amount of payroll taxes the employer pays, which is the sum of all these. So remember, the employer has to match Social Security. They have to match Medicare. So that's the same number. You don't ever have to do the calculations again. That's the same number as on the payroll register. And then FUTA, tax payable, and SUTA are the amounts that you have to calculate based on the earnings of the employees. Okay, so these are all payables. In other words, they all go other places. I owe Social Security and Medicare, and I owe the federal and state unemployment tax, whatever, collectors, this money. So these are all payable, and this is your total tax expense. We're keeping track of that because we always have to have our debits and credits. So this is the total amount. Remember what's happening here. This is a total amount the employer pays in addition to this $8,000 or really $12,000 that's coming out of his business. So payroll tax expense, remember the names of the two categories. Payroll tax expense is what the employer pays. Okay, this does not contain workman's comp, and they don't give you an example in the book. Workman's comp goes back to those accounts. It's a prepaid, and then it would be out of cash. And then at the end of the year, you would have to go back and adjust your accounts. You don't ever have to do that. That is not on the quiz. But this stuff is on the quiz, the stuff I just went over. So you have to be able to journalize the payroll register. You have to be able to journalize the payroll tax expense. Okay. I think the good news is I don't think in your quiz they have you put this in a ledger. I think it's just calculations and then journalizing it. So all the numbers for these categories, payroll tax expense and payroll register, are going to come from your payroll register here. You have to calculate FUTA and SUTA separately. FUTA and SUTA would be calculated separately because that only shows up for the employer. And that's how we did that in section 7.3 and 7.2. Okay, so it's a pretty short end of the chapter, and you guys are going to have a quiz on this pretty quick. It does show a little bit on workman's comp. Let me get out of the picture here. I can't really get out of the picture very well. So it says your original estimation, just like I said, is prepaid insurance and cash. So that's what I think I owe. And then they go back and have to adjust it at the end of the year. But you do not have to do an adjustment. It's not on the quiz. I cannot find a problem that has that. Okay. So what my advice is make sure you do the homework and you know the difference between payroll tax expense and doing the journalizing the payroll register. Okay, I think I'm going to call it quits there, and good luck. Alrighty, take it easy. Bye.